Ladies and gentlemen, good day and welcome to the Aimco Pesticides Limited Q4 and FY22 earnings conference call hosted by TIL Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sayam Pokharna from TIL Advisors. Thank you, and over to you, Mr. Pokharna.
Thank you, Mike. Good afternoon, everyone. I hope you all are well. Welcome to the Q4 and FY22 earnings call of Aimco Pesticides Limited. From the management team, we have with us today Mr. Sameer Dave, Executive Director, Mr. Ashit Dave, Executive Director and Chief Financial Officer. The presentation for the quarter and full year has already been uploaded on the stock exchange and on our website, and the same has been emailed to you as well. In case anyone does not have a copy, please feel free to reach out to us. Before we begin this call, I would like to remind you all that everything and anything said on this call that reflects any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties have been mentioned in our annual reports. With that said, I would now like to hand over the call to Mr. Ashit Dave for opening remarks, post which we can open the floor for question and answers. Over to you, sir.
Good afternoon, everyone, and thank you for joining our earnings call for Q4 financial year 22. It is my absolute pleasure to be talking to all of you in this afternoon. I will start with a brief overview of the quarter and full financial year, and after that we can open the floor for questions. Q4, I'm pleased to present that we have reported another robust quarter. Our Q4 FY22 revenue from operations stood at 6.88 crore, growth of 67% year on year. As we have communicated in the presentation as well, on a quarterly basis, our revenue is down by 24% due to higher base of Q3 22 on account of some additional trading sales which we had in Q3 and certain production shutdowns which we had to take in the month of March 22 for maintenance and debottlenecking. As a result, profitability for the quarter reduced marginally with EBITDA margin at 6.2% in Q4 FY22 compared to 6.9% in Q3 FY22. For the financial year, on a yearly basis, this year we have reported a highest ever top line of 311.99 crore. It's a significant growth of 78% over the previous year. This was possible on account of higher production levels which we have achieved during the year, better capacity utilization, and better product realizations. We have also successfully completed the first financial year of our multi-year contract manufacturing deal. And on the profitability front, annual EBITDA margin were at 6% compared to 5.6% in the previous year. The demand outlook for the coming year is also very good. For the coming financial year, we have a higher capex outlay plan. We will be looking at an increased production capacity of 6,000 metric ton from 4,000 metric ton currently. This expansion will take care of our growth for the coming 2 years. Furthermore, the company also plans to spend higher amount on projects such as material facility and utilities. Company is trying to keep production disturbances to the minimum despite all the ongoing expansion works at the plant. And on the logistics front, the challenges are again emerging for the entire industry. Currently, we are witnessing congestions in Chinese port, other global ports leading to higher lead times and higher freight cost. However, we have mentioned in the past there is a better acceptance and appreciation of these challenges with the customer also. And we have been able to pass on most of the increased costs during this quarter and the previous quarter also. And we are at a much better position to deal with such circumstances. We continue to carry higher inventories as a risk mitigation strategy to avoid any production disturbances. Also, since we are looking at increased production in the future, we have decided to carry some of the raw materials at a higher level of percentage of stocks. And with this, I conclude my opening remarks and I will welcome participants for questions. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Devang Bhateja, who is an individual investor. Please go ahead.
Yes, sir. Congrats on a very good financial year 22. My first question is if you could share the breakup between value growth and volume growth for the full financial year and Q4.
I don't have the exact breakup of the value growth and volume growth. But volume growth, yes, I can give you some indication on volume growth that we were having capacity of 3,000 metric ton, which we increased it to 4,000 metric ton during this year, the current financial year, FY22. And we have achieved almost 90% production capacity as of now. And we have added about almost 900 metric ton additional production to the previous year. Value-wise, I don't have the figures in hand, so it will be difficult to tell you.
Sir, any rough estimate in double digits at least, more than 10%, the value growth?
The value growth is about 10%, about.
Okay. And sir, we were expecting one approval from Brazil, I think one registration that we had done earlier. So any update on that?
Yes, there is an update on that. We recently received an update on the registration. The registration was under evaluation from last couple of months. And last month we received the information that it has gone for phase 2 evaluation. So what that means is that we need to carry out some more data on the product and submit those data in the span of 3 months. We have initiated generation of additional data and we plan to submit the data in next 3 months. And we expect that the whole process should not take beyond more than 6 months for the registration to be issued.
And sir, any idea about the market size of this product or any kind of market share we can look forward to whenever the approval comes in?
Whenever the approval comes in, we plan to add about 80 to 100 crore revenue of this product in export business.
And sir, this additional capacity that we are adding will cater to this, or we will need to do another round of capex for this product?
We increase our production from 4,000 capacity from 4,500 to 6,000 metric ton. It will cover the additional demand.
Okay, sir, great. And sir, last time we had mentioned that our due to the volatility in RM prices, we have shifted to a monthly pricing. So does that continue, and how are the clients reacting to it? Are we getting the price hikes on time, or anything you can share on that front?
It is continuing on monthly basis. The prices are reviewed every month, and so far we have not experienced any major problems with this new pricing policy. And from But what we have observed is that from last at least 2 months, the prices have stabilized. There are no wild swings on the front of raw material pricing or the freight charges also. Freight charges are going up, but they are still manageable.
Okay, sir. So in that case, can we expect our EBITDA margins to improve a bit, or anything, any guidance you would like to give on that front for the full financial year?
That is the target. We want to continuously improve our EBITDA margins. And as we increase our production size, we also expect to improve on the EBITDA margin so we can share some of the fixed costs. So quarter on quarter, that is the target of improving EBITDA margin.
Sir, any ballpark, are we looking at double digits, or are we looking at 9% EBITDA, or anything on the gross margin also, if you are targeting, that you could share?
On a yearly basis, I think right now we are at, last quarter we were at 6.2%. We plan to at least, be in the range of 8%, 7 to 8%, or going up to 9% in few months. So that's the target, but we still have to wait and see. But the target is to improve upon this number every quarter. Where we reach, we have to see.
And sir, anything on the gross margins? What are we targeting on that front?
Gross margins also, I think, don't have the right now. I don't have the numbers. But similarly, we, like EBITDA margins, we plan to continuously improve upon our margins for the coming quarters also. And I don't see any reason why we should not be able to improve upon these margins.
Okay, sir. And sir, for the full financial year, you have maintained a very strong working capital cycle, and we have had very strong cash flows also. So was it a conscious strategy, and do you see it sustaining?
Yes, I don't see any change in our strategy of purchase or sale during this year also as compared to last year, and we will be continuing the same policy.
Okay, sir. Thanks, sir, and all the best.
Thank you. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Karan Jain, an individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity. My first question was on the product realization part. What sort of average increase have we witnessed in FY22 over FY21 for all the key products like the Divasalcerine, Chlorpyrifos, and Tyripur? If you could just state the average increase over the year.
Average increase on product realizations would be about, say, around 10%. But products like Chlorpyrifos prices are very volatile because it is subject to very high competition from China and subject to raw material prices going up and down. So you can't put a fixed number on Chlorpyrifos, but on an average, the whole year, if you see what is the price of Chlorpyrifos, what was the price of Chlorpyrifos earlier year and now, it's about 10% higher.
And is this increase mainly because a cost driven, or are we
cost driven? Mainly cost driven.
Okay. And could you throw some light on the new product commercialization front?
So new product commercialization, we are planning to commercialize at least one new product this year. As you may be aware that we have to initiate registration processes in many countries simultaneously before we start manufacturing new products. So registration work is going on, and we expect those registrations to come up very soon. And this year, we expect at least one product we will be able to commercialize, which is an insecticide, a new insecticide.
Okay. So another question is like, if we look at the average export data, your manufacturing business seems to have come back in FY22. So if you could throw some light on that, I mean, what is the reason for the increase?
Bifenthrin, as I had explained earlier, we still don't have all the registrations in place by which we can start a large production of bifenthrin. We have few customers, export-based customers, and we have few registrations with which we have started manufacturing bifenthrin. But last 2 years we had some setback because of one of the customer who was the large customer for bifenthrin for us. They were having some financial issues, but now they've been bought by private equity, and then the business has started again. So last year we could see revival of bifenthrin business from that customer, and this year also the outlook is very strong. We will be able to double the volume what we did last year on bifenthrin.
All right. One last question on the capex front. So you mentioned that you'll be incurring a high amount of capex this year. If you could give us a range between the amount of capex.
Capex, as of now, what we have planned is about 10 crore rupees for this year.
Okay. And for FY23?
FY23 will be higher, but we will still wait for the finalization of numbers, and in next 2 or 3 months we will be able to finalize all the numbers of capex.
Okay. Thank you, sir.
Thank you.
Thank you. We have the next question from the line of Ashaf Patel from Molecule Ventures. Please go ahead.
Good afternoon, sir. So, within the technical segment, our sales have improved from 102 crores last year to 218 crores. Now, we have given an announcement in April 21 regarding multi-year tie-up with some of the companies. So, what quantum of this increase is coming from that particular deal?
About 80 crore rupees came from that contractual manufacturing agreement.
And
yeah.
Please go on.
And this year also we are looking at additional higher numbers in the contractual manufacturing agreement. So
okay.
Yeah.
And sir, if I broadly see the financials, the gross margins have remained around 20% compared to last year. Also, it was 20%. Even this year, it is 20% blended level. Whereas our sales in technical segment has improved from 58% of the top line to 70% of the top line, which is relatively the highest margin product in our profile. So this doesn't add up. Can you please explain on the same?
I think this year our Q1 we were not able to achieve the numbers, and because of lower production levels in Q1, these numbers have I don't think these numbers will not match. But Q3 onwards, we have been able to consistently perform on higher numbers. And going forward, you will see an improvement in margins.
So what kind of gross or EBITDA margins are we aiming? Suppose once we are able to achieve the steady state rate of 80 to 100 crores within the technical tie-up, which contributes to our top line, what kind of margins can we expect?
Margins we want to be in the band of 7 to 9, minimum 7, going up to 9, and that's the target. And we are very hopeful that we will achieve that this year.
But going forward, as the technical contribution increases, the 7 to 9% margins would be very much sustainable, unlike past, right? Because in the past, something or the other comes up and our margins are very volatile. But this time, as technical contribution increases, the 70 to 9% margins would be very much sustainable. Is that understanding correct?
Correct. Because of and it is helped by this contract manufacturing business. So it brings the stability of volumes every quarter, and because of which we are very confident that we'll be able to achieve these numbers.
But maximum annual run rate from the contract is around 100 crores, right?
Yes, which is expected to increase this year.
Sure. That's all from my side. All the best, sir. Thank you.
We have the next question from the line of Samar Singh from.
Hello. Thank you for the opportunity. For the year, could you please give the breakdown percentage exports versus domestic?
Exports versus domestic. I'll show you. For the year, we had 180 crore of exports and 132 crore domestic business.
Okay. And what was the freight cost as a percentage of sales this year versus last year?
Freight cost.
Do we move on to the next question?
I'll find the freight cost and I'll come back on that.
Sure. And on triclopyr, I'm guessing that would be our main growth driver for the current year.
Yes.
So, could you just talk about dynamics? I think you had mentioned that in India there's only one other player, Karda, but I think Bhagirata is also into triclopyr. So, if you could just talk about that, whether the intensity is going up and the number of players and the demand out there.
Yes, Bhagirata also manufactures triclopyr, but as far as my understanding is concerned, they are not regularly in production of triclopyr. Their focus is on different products. So for us, the focus product is triclopyr. And so as far as we are concerned, our biggest competition would be Ghada Chemicals. And so right now we are two large manufacturing companies of triclopyr in India. And we basically compete with Ghada in most of the markets.
Okay. And this, it's I think 20,000 metric tons per year globally for triclopyr. Is that number about right?
It is increasing. It used to be about 20,000 metric tons per year, but it is increasing more than 20-25% every year.
Wow. Okay. And the demand is coming from why? What's the reason for this growth?
One of the main reasons for this growth is the other herbicide, which is paraquat, is getting banned in most of the countries. And the alternative to paraquat is, say, glyphosate. And glyphosate prices are, at the moment, from last at least 1.5 years, are hovering around $10 a kg. So per hectare consumption of triclopyr is cheaper than glyphosate at the moment. And because of which triclopyr demand is increasing very fast. And it is also now used in a lot of combinations with other herbicides. So the demand is very strong.
Okay. And lastly, on the CRAMS, when are we going to which quarter do we expect the increased capacity? And I believe we were in conversation with our client regarding an increase, as you mentioned. So what is the expected increase in the contract amount?
In the Q, plan to start the increased capacity production, which should stabilize by Q3. And Q3 onwards, we plan to have the full increased capacity production available.
And that would go all to our CRAMS business?
Yes.
So I think we're adding 1,500 tons per annum of increased capacity. all of that will be contracted out to our one client.
Yes.
Okay. So that is that is a rate of revenues the moment the plant is up and running.
Yes.
Okay. Thank you very much.
Thank you.
Thank you. We have the next question from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello. Thank you very much, sir, for the opportunity. Sir, I just firstly wanted to understand on the product registration side. Now you mentioned about one product this year. So some pipeline you can share for FY24-25 as well. So how many products we are looking for registration?
For 24-25, we have 3 more products in pipeline, which are under registration in various countries. And we expect these registrations to come through in normal time, say 5 to 6 years. And not from now, but we have already started the process of registration earlier. So we have 3 more products in pipeline. One product which we plan to, the insecticide we plan to commercialize this year. And after that, 3 more products which we have in pipeline.
So 3 more in pipeline apart from the one we are talking about in FY23, the insecticide product, right?
Yes.
So that 3 products we expect to come in FY24 next 2 years, like FY24 and 25?
All of them will not come in 2 years. I presume only one would come in next 2 years, one more. And the rest of the 2 will take at least another 3 to 4 years.
Understood. And what can be the revenue potential of this new product?
Quite large, but I would like to comment on those products when we are having the registration in sight. Right now, I feel that we should discuss revenues because they're quite large numbers. So 4 years down the line, how the market condition is there, how many competitors are there, it's very difficult to make a judgment on that.
Okay, fair enough. Understood. Understood on that one. And in terms of your, you mentioned from third quarter onwards, maybe we will be fully utilizing our expanded capacity of 6,000 tons, right? So at 6,000, what will be our maximum revenue potential if we utilize maybe at what 95%, the expanded
capacity utilization, then the top line should be about 550 crores.
550 crores. So
yeah. 36,000.
And so this is the kind of revenue we might be targeting next year, maybe FY24?
Oh, yes.
Okay,
That's
okay.
Right. Yeah.
Okay. And this expanded capacity, maybe a half year benefit will get this year, right?
Yes.
Largely.
At least half the benefit to come this year.
Okay. So basically, incrementally, if I assume that we will get 200 to 250 crores revenue from this new capacity, so 50% of that, maybe 100 to 125 crores may accrue this year. So
yes.
So about 450 crores.
That's the target. Yes. Yeah.
In terms of revenue. Yeah, fair enough. I got it. And in terms of my final query is in terms of your contract manufacturing. Now, what's the run rate in terms of tons per month we are doing right now?
Right now we are at about 125 tons per month. The contract is on 100 tons per month, but we are at 125 tons per month right now. 120.
And we were targeting somewhere around 300 tons per month, right? Maybe in near future. Is that something that is still on the cards? Or?
Yeah. Yes. That's the target we want to achieve by Q3.
By Q3. Okay.
Yeah.
Okay. Fair enough. I understood. All the very best, sir. Thank you so much.
Thank you. We have the next question from the line of Jatin Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good numbers and thank you for taking my question. So my first question would be, you said the revenue from our big contract manufacturing customer for the last year was 80 crore. So, and in our press release, which we did in April of 2021, we said it's a 3-year contract and we expect around 250 crore. So is there any more increase in revenue from that 250 crore number, or are we saying that
It will definitely cross the 250 crore, what was declared during the initials when we signed the contract. Because the contractual quantity per month was 100. It is still right now at 100 metric ton per month, and we are supplying beyond 100 metric ton per month, and we plan to increase further this year, going up to 300 metric ton per month.
So from that 80 crore of last year, how much are we expecting for this current year?
Current year, we expect to reach at least 120-125 crore.
Okay, that's nice to know, sir. And sir, on the other side, domestic and export side, so we are seeing very good monsoons, high agri prices. A lot of companies are quite bullish on both India as well as export side. So how do we expect growth to be for this coming year?
We expect our Indian operation will continue to grow at a pace of 15% to 20%. The branded formulation sales, what we have in India. We looking at a very good monsoon this year also, which is predicted. We expect growth of 15 to 20% in that business segment as well. Export business also, we expect that our bulk formulation sales, technical exports of other products to our customers also will grow at 15 to 20% this year.
Sir, on the Brazil product side, what kind of EBITDA do we expect? It will be similar to company level or will it be higher?
At the moment, it is looking higher, much higher than what we have right now. But that will happen only once we have the registration, our own registration. And that looks like another 6 months wait.
Sure, sir. And you said revenue potential after full capacity will be 550 crore. That will be done in FY24. We expect that to be fully utilized by FY24?
FY24, yes, we expect full utilization by FY24.
Sure, sir. Thank you and all the best.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Ramit Bharadwaj from ZB Bytes. Please go ahead.
Yeah, good afternoon. So my question is regarding the maintenance downtime that you had in this quarter. So approximately how much did that affect our revenue? How long was the maintenance downtime? And X of your that you have mentioned that you had a YOY, you had a trading revenue. X of that, what was the degrowth? What was the degrowth? Okay, and secondly, and probably more importantly, is there any other prospects for the contract manufacturing? So please.
As far as I understood both your question, I'll address question 1 is that what was the reason for lower sales in quarter 4 as compared to quarter 3? There were 2 main reasons. One reason was that the quarter 3 base was higher than normal because of some added trading business we had in quarter 3. And in quarter 4, we had to take certain shutdown of manufacturing facility due to change of equipments. We were changing some of the utilities like boiler and other utilities for the higher capacity production which we plan in future. So because of all these activities, there was certain loss in production during the month of March. And that was one of the reasons also why we could not achieve higher numbers in March. And sorry, yeah, go ahead.
What was the downtime in number of days? If you can just quantify that.
Total, it would be about 7 to 8 days of downtime.
Not much.
Yeah.
All right. And what was the trading sales in the last quarter? Q3?
It was about 20 crore rupees.
Oh, yes. Okay.
So now your second question was on the contract manufacturing business, right? So contract manufacturing business, we do expect increase in volume during this year. from Q2 and Q3 onwards. So Q2 onwards, we will have some additional volumes coming out of production, and Q3 onwards, we plan to have at least full capacity utilization of the increased capacity. And so yes, we expect the numbers to increase this year.
Yes, so basically, I was trying to understand if there was any new prospect in terms of client, any new client that we are talking to regarding contract manufacturing.
At the moment, no. No additional contract manufacturing business is being discussed, but we do pursue all opportunities we come across. So in future, yes, going forward, we will have additional contracts also.
Great. Last question, sir. So you have raw material cost pass-through clause in your all the contracts. Is it all the contracts, by the way, or is it a percentage of the contracts that has this clause?
So in the contract manufacturing, this contractual manufacturing agreement, what we have, 99% of the raw materials are tied up with the cost escalation clause. So there is nothing left.
Okay. Okay. That's it. Thank you.
Thank you.
Thank you. We have the next question from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. So just wanted to confirm, if I heard correctly, we are saying we'll be doing around 400 crores plus revenues in FY23 with an EBITDA margin of 7 to 9%. Is that correct?
Yes, you are correct. That's the target.
Okay. Okay. Thank you. Thank you very much.
Thank you. We have the next question from the line of Devang Bhateja, an individual investor. Please go ahead.
Yes, sir. Sir, I wanted to know from a strategy point of view, like say over a 5-year period, what would be the avenue mainly for our growth? Would it be more of contract manufacturing, or would it be more registrations in countries like Brazil? Would it be domestic market?
So we have, decided to be present in all three segments, where we continue to grow our domestic branded sale business every year, and we have been able to achieve consistent growth of 10 to 15% over the past few years, and going forward also we will do that. As far as export market is concerned, we continue to invest in new registrations of new products in different markets all over the world. So we want to grow in that segment as well. And what was missing was having a contract manufacturing deal which brings stability to the numbers, which we have been able to achieve last year, and we have now increased production beyond the agreed capacity. And going forward, we will continue to increase new products also and increase on the numbers on the current product also. So all three segments we would like to grow going forward.
So in that case, since we are doing so many things, so does it put too much pressure on the top management, or do we have separate verticals inside the company? I mean, in terms of management bandwidth, how is it handled inside the company? If you could share anything.
So as far as management of all this growth is concerned, we have a lot of senior people working, looking after different segments of the business. And as and when we feel the need to add personnel, we are continuously adding.
Thanks, sir.
Thank you.
Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. As we have no further questions, I would now like to hand over the conference to Mr. Dave for closing comments.
Thank you everyone for participating in our conference call. And we have discussed various aspects of our business, and we will continue sharing whatever information we can to communicate with our investors. and looking forward to having a very fruitful discussion with you in future. Thank you very much.
Thank you. On behalf of Aimco Pesticides, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Bye, everyone.